It only takes £500 to quit your job for good, and here's how. If you're new here, I'm Emmy. I've spent 11 years in investment banking and built a 300k portfolio in my 20s. So step number 1 is to open an investment account. As a beginner in the UK, the best one to start with is the Stocks and Shares ISA. It's a tax-free investment account where you can invest up to £20,000 every year, and you don't need to pay any tax on your returns. Now, what do you actually invest in? Warren Buffett, arguably the most successful investor ever, always recommends investing in low-cost broad market ETFs because they are low risk and already diversified. One of the most popular ETFs in history has been the S&P 500. It tracks the top 500 US companies, and it has returned on average 10% for the past 100 years. Now here's where it gets interesting. You need to work out your FIRE number, which stands for Financial Independence Retire Early. It's the amount of money you need to have invested so that you can live off your investments passively for the rest of your life. To calculate it, you can use something called the 4% rule. The idea is that you only take out 4% a year to live on, and the rest can continue growing to offset inflation. So here's how the math works. Say you want to have £3,400 a month to live on. That's £40,000 per year. Divide that by 0.05, and that means you will need £1 million invested by the time you quit your job. But how do you actually get there? Using a compound interest calculator, saving £500 a month will get you to roughly £1 million saved in 30 years' time. So if you're 30 years old today, that means you're financially free by the time you're 60. If you're 20, you'll be free by 50. But here's what's actually going to blow your mind. Out of that £1 million, it's only £180,000 your money, and the rest is compound interest. And if you want to know how this looks like on a smaller budget, follow for more so you don't miss it.